The local index and rand looked slightly sluggish this morning after closing in positive trajectory. Local markets closed in the green yesterday as better than expected U.S. jobs data boosted investor sentiment. Chief Investment Officer and founder at Makwe Fund Managers, Makwe Masilela, joins us now for an overview of the latest market moves. Makwe, very good morning to you. Always a pleasure to have you on the show. Give us an overview of how the local index and rand are trading so far this morning.
So far this morning, unfortunately, we opened in the red after closing in the positive yesterday, and all because of the comments that we got from the testimony made by the U.S. Fed chair. He did indicate that they're not in a hurry to start cutting interest rates, but definitely he expects a cut sometime this year. But now later thereafter, we got another Fed official stating that, you know what, they might probably give us 1 or 2. So those were kind of mixed signals that we got from there. Then unfortunately this morning, the markets are going with the latest comments that are coming from these other Fed officials that probably will get 1 or 2 rate cuts. And it's very important to realize that the minute you get interest rates staying higher for longer, they will definitely weigh on your economy, then have a negative impact when it comes to company profits. And as a result, they tend to affect risk-averse assets, just like equities and stocks.
Now, Moody's has opted to downgrade the city of Ekurhuleni and put the city of Tshwane on notice for a downgrade. Talk us through these developments and what that essentially says about the state of the country's municipalities and their management, especially in an election year.
A warranted move, and I think it says to the politicians and management of these entities that as much as it's well and good to raise capital in the capital market because it tends to be more cheaper than going maybe to financial institutions, you need to abide by those rules, because people who are buying those bonds, who are helping you to raise that capital, they're using other people's money, pension funds, stuff like that. So it's critical that you need to submit things on time. And in all fairness, people will only give you money because they believe that you'll be able to repay them. So the minute they start seeing your liquidity becoming an issue, starting to raise doubts that you won't be able to repay the debt, then it becomes a problem. And as it stands now, there's a likelihood that maybe those bonds might be delisted, which is just going to exacerbate the situation. So all it tells you is that it's clearly there's poor management and leadership when it comes to those municipalities, and they need to realize that as much as they might be holding those political positions, it's very important to know that now they're dealing with capital markets where people are just interested in making good returns.
Exxaro Resources has a trading statement for the year ended the 31st of December 2023. What do those numbers look like?
The guys, they expect their profits as headline earnings per share to drop by almost 30%, all because they got lower prices when it comes to the export sales, but that was partially offset by at least good pricing when it comes to the domestic market, and also the rand exchange rate managed to benefit their local production. But fortunate for them, they'll be able to make a decent income when it comes to the likes of their energy business because of better wind conditions, and also their investment from the session iron ore will be helpful.
Tradedor has also has their results out. Help us make sense of that performance.
The guys, we know that the domestic market is not looking okay because now lately people, as much as they understand that security continues to be important, but people have been shifting their spend more into alternative energy because of load shedding. Hence, the domestic market didn't do that great, but the international market, especially the UK market, did well. We've seen them increase in revenue. It's just that the international revenue accounts for only 28% of the group revenue, and now as a result, the guys only managed to increase the group revenue by mere 6.9%, and their profits as headline earnings per share down 21%. And when they started, the opening debt was much higher, but gradually they managed to reduce that by almost 16%. And unfortunately, we are not getting any interim dividend from them.
Well, thank you so much, Makwe Masilela of Makwe Fund Managers, giving us a brief overview of the latest in the world of business.